Hi, welcome to Market Week in Review for the week ending November 8th, 2024. I'm Paul Eitelman. I'm the Chief Investment Strategist for North America here at Russell Investments. And this was a really big week for markets with key developments spanning across both politics and monetary policy. If we start with the obvious one, the U.S. election here in the United States, votes are still being counted here on Thursday in Seattle, but it looks like the outcome is trending towards a wave election for the Republican Party. The race has been called for former President Donald Trump. It looks like Republicans as well have already gained control of the Senate. And while the House of Representatives has not yet been called, the votes there as well look like they're trending towards control for the Republicans too. So this idea of a unified government for the Republican Party going into 2025 is the sort of key news from an expectations perspective this week. And those wave elections tend to be the more consequential ones for asset markets because then a party actually has the ability to legislate through policy and reshape fundamentals for the corporate sector. In that regard, for us on the policy landscape, there's four key focus areas for investors going forward. The first is around tariffs and trade policy with an expectation that tariff rates will very likely go up, particularly against China, but also potentially against other U.S. trading partners like Europe and Mexico. So I think that's going to be a key watch point into 2025. Second is immigration policy. There, an expectation that immigration flows into the United States are likely to be limited somewhat, and that having implications onto demographics, but also the labor market that's been an important watch point around inflationary dynamics for the last couple of years. Third is fiscal policy. With a wave election, most investors, ourselves included, think that fiscal policy will remain in an expansionary mode for at least the next couple of years now. That's going to keep putting pressure on deficits and the national debt going forward, and specifically within kind of individual initiatives. With Trump winning, it seems as though some of the household tax cuts within the Tax Cut and Jobs Act from 2017 will now very likely be extended beyond the end of 2025. And then for the corporate sector, there's been chatter about cutting taxes there, and by our estimation, those tax cuts could potentially lift U.S. earnings growth by around 5 percentage points. Fourth and finally is around deregulation, and there I think a specific focus and interest into what it could mean for sectors like financials and energy going forward. So a lot of moving parts here as we map it into economic growth. The cross currents end up kind of mixed, where it really comes down to what Trump and the Republicans choose to emphasize across those four initiatives into 2025 and beyond. But I wouldn't be surprised if it ultimately proves to be supportive for economic growth over the medium term. And then I think on inflation, there the consequences are a little bit more obvious, where our expectation is that these policy moves would likely put a little bit more incremental pressure on inflation risks going forward. So I think that's what a lot of investors were focused on. We did see some pretty notable moves across financial markets, particularly on Tuesday evening as the votes rolled in. In many ways, it looked like a copy and paste of what we saw back in 2016 with a reflation trade vibe across markets. Treasury yields at the long end rose pretty notably on Tuesday evening, reflecting some of those concerns around deficits and inflation risk. The trade-weighted dollar appreciated notably, particularly against currencies like the euro and the Mexican peso around changes to trade policy going forward. And equities are really quite strong, I think, taking a cue from the potential, at least, for corporate tax cuts to benefit fundamentals going forward. We saw the S&P 500 index move north of 6,000 this week, and the small cap space, the Russell 2000 index, significantly outperformed. And there, I think the combination of maybe more M&A, deregulation, strong nominal growth, et cetera, were viewed as tailwinds for the sector. Moving beyond the U.S. election, we had a couple of key monetary policy announcements this week. Both the Federal Reserve and the Bank of England cut rates by 25 basis points. what we heard from Powell in the U.S. very much rhymes with how we're seeing the U.S. economy right now, which is a picture of resilient economic growth and moderating inflation over time. That's an environment that's conducive for the Fed to gradually be cutting interest rates back down from restrictive to more normalized levels going forward. So very much in line with our expectations. And even after this meeting, we're continuing to expect the Fed to cut rates at quarter point increments going into the middle of 2025 here. So a lot of news this week and a key one for global investors. Thanks for tuning in, and we'll see you next time.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.